Stop audio wasn't on. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Matthew in real life and Blind Run on the internet. And hey, we got a bunch of Bitcoin prices going up, so that's good. We hit the all-time high, over $109,000 for a single Bitcoin. And that is obviously come back down, but that's okay. We also have some altcoins following the trend of Bitcoin going up. Nothing too significant, but we are in profit for ASICs, CPUs, GPUs, and of course FPGAs. So across the board, profitable, or at least more profitable than previously thought. And so that is looking good, but the altcoin market is still lagging behind a little bit. There was a surge in price of Ethereum. I think that was more than likely due to the Pectra upgrade, along with some other changes that they're making. I probably won't be covering that a lot today, but we will be talking about a surge in Bitcoin sales from Bitcoin miners. We'll be talking about, of course, the surge in price of Bitcoin. The Texas House has passed the Strategic Bitcoin Reserve Bill, so we're going to be covering that. And SEC Chair Atkins is pressed on the Trump meme coin, so we're going to be talking a little bit about the Trump meme coin because I think it will play a factor in essentially the regulations coming into play here in the near future. And then we're also going to be talking about CoreWeave, which is a success story of a crypto miner that shifted into AI. And then we'll be talking about the Bitcoin hash price, of course, some new GPU news. We have news on the 5060 8GB. We have news on the Arc B60, and we have news on the 5080 Super, as well as there was a little bit of news on the latest Intel GPU that fell out of my notes. We'll go find it later. I thought it was up there, but we'll go over that in a little bit. And then there is some legislation that did end up passing, and it will be going to proceed into consideration for the Genius Act, which we've been discussing over the past few weeks. So if you want more details on that, definitely go check it out. SRB Miner released a new version, 2.8.8, and that is in support of course, the new hot token on the interwebs, the Tari token, and I believe, well, Tari is the blockchain, XTM is the token, and I believe that one has gone from CPU to GPU to FPGA extremely quickly, so I presume that we will eventually see, if I had to take a guess, some sort of ASICs launch for it as well. There's some drama surrounding it. In particular with Osprey's Bitstream that they were working on, as well as the Allfather's Bitstream. So maybe we can talk a little bit about that, which came first, all that sort of thing. But I hope everybody's doing good today. Good to see the locals or the regulars up in here with Heavy Flavor, as well as Josh Clements and Impala, as well as Argent Air. I always say that wrong. Argentinier. There we go. Anyways, Jorda, welcome to the stream. Good to see you back here. And 10 minutes to midnight. Don't recognize the name right off the bat, but thanks for stopping by and saying hello. David Hader's here as well. If that's a real name or a troll name, I don't know, but we'll see. Well, let's hop into the first one. Bitcoin miners sold record amount of Bitcoin ahead of May's price surge. So with hash price hovering near break-even levels, miners liquidated 115% of their April production. So Bitcoin notched a new all-time high of 109,000 on Wednesday, but that's a small consolidation for Bitcoin miners who last month were forced to cash in a record number of their Bitcoin reserves, according to mining news outlet The Miner Mag. The firm's latest research report reveals that public miners sold 115% of their Bitcoin production in April. So they're selling more Bitcoin than they're making, which is probably not a great sign for their stock prices, obviously selling that off and then followed up directly by an increase in the price of Bitcoin. That's a tough pill to swallow, I'm sure. And that does mean that it is also the highest ratio since the tail end of the 2022 bear market. Even today, with Bitcoin breaking to a new record high above $109,000, hash price, what miners earn per unit of computational power, has failed to follow suit. It stands at just $55 per petahash per second, well below the $63 per petahash per second level it briefly reached the last time Bitcoin crossed $100,000 in December. Elevated network difficulty and weak transaction fees have kept revenues under pressure, and this has been the elephant in the room, which is Bitcoin's not getting used. And in fact, the majority of blockchains aren't being utilized. And what does that really mean for miners? Well, for those that aren't aware, and I think most people that watch this channel are, but for those that aren't, miners basically get rewarded for running and mining the transactions, or providing basically the ability to transact on the blockchain in one of two ways. The first way is a block reward, and this is usually on a schedule to be reduced over time. In the case of Bitcoin, it is cut in half every 4 years. And that means obviously every 4 years, miners make less Bitcoin, which usually kicks off an increase in the price of Bitcoin, because obviously power is money. At the end of the day, energy is money, and it costs money to run the miners. And therefore, of course, you end up in a position where they make less. So the value of the asset they are making goes up typically, right? This is changing. And one of the big factors, the second way they get paid, is through transaction fees on the network. So every time you transact on the network, you pay a network fee, and a portion of that goes to the miner. Usually all of it, if it's like a solo block, but we could get into mining pools, all that sort of stuff. I've covered that at length on this channel if you're interested in the more technical details there. But because the Bitcoin blockchain isn't being utilized near as much as it has been in past bull cycles, or in past halving cycles in general, and is at a really low usage rate, it means a lot of the blocks that the miners are mining are empty. And because of that, there's not a lot of fees being gathered. And this means that miners are making even less after this last halving than they have previously. And really, when we talk about cryptocurrency mining, the price of Bitcoin, and the effect of the halving on the price of Bitcoin, usually the general consensus is that we will see the halving cycle affect the price of Bitcoin until fees meet parity with the block reward. And seeing that the fees are nowhere near meeting parity, it kind of brings into question is if that will actually come into fruition. Reason being, obviously, is because this has been the most suppressed Bitcoin halving cycle from a price perspective that we've ever seen, right? I mean, typically, we would have already seen a single top that is 3x that of the previous all-time high, meaning we would have expected back earlier this year at the first top over 100,000 to go even higher, closer to 200,000. And then we would expect that to pull back and then happen again here near the 18-month mark coming up in October. But that's not really the case. So the question is, how much of an influence are miners actually having on the price of Bitcoin now that there is just not as much Bitcoin being minted per block via the block reward? And it appears to be less and less. And this is going to be a really interesting time over the next, 4 to 8 years as to whether or not, miners impact the price of Bitcoin near as much as people expect them to. The part of this obviously is due to the fact that, a lot of these companies are trying to stay liquid, generate revenue, and keep cash flow running. And it's forcing them to sell off Bitcoin that they've been holding in anticipation for this bull market. And in the past, that anticipation for that Bitcoin, for that bull market and miners holding their Bitcoin was a lot more influential because miners had more Bitcoin. Now they really don't have as much Bitcoin to influence the market as they have in the past, because a lot of Bitcoin is frankly just in circulation and being held by individuals, or really at this point companies. And the thing is nobody's selling their Bitcoin. This was brought up previously in a forum post with Satoshi himself, and he kind of predicted that this would happen. In the case that you have large companies or entities purchasing up all the Bitcoin, the appreciation of price will be suppressed, because if a company has all the Bitcoin and isn't selling it, and then nobody can access Bitcoin, then nobody's utilizing it, then there becomes less demand for Bitcoin, suppressing the price of Bitcoin and fiat. And so at the end of the day, it does appear that this is somewhat true. The question I have is, what does that look like when the block reward for Bitcoin gets cut in half once again, 4 years from now? And how much of an effect will that have, right? So I think we will be looking at 2028 for the next halving. Will we be seeing an even more suppressed price, or is it really what everybody says, which is macroeconomics purely? It's really up in the air to me. I think right now, at this point in the cycle, from a time perspective, seeing public miners sell off more Bitcoin than they generated for the quarter, or for the month of April, I should say, in this particular case, is a concerning statistic. And so we'll have to really see where it goes from there. And solo mining that doesn't really help. That doesn't help the price of Bitcoin move up or down. I know Best Spartans Forever is saying solo mining is the way right now. I mean, if you had solo mining, okay, so solo mining, if you have statistics for the amount of hash rate to actually generate a guaranteed revenue, would make sense. But because that's not the case, all solo mining becomes, at least in the case of Bitcoin at this time, is a gamble, which means you're just basically playing the lotto. You're not running a business, frankly. So I disagree with that from the perspective of Bitcoin, dependent on the amount of hash rate you have. If you have enough hash rate to generate a guaranteed amount of Bitcoin, and you can work the cash flow numbers out for that to make sense, then it makes sense. If you can't, then it doesn't make sense. You're not going to be able to go, like, if it was if you try to consider a business and then you go to A, B, or C bank, any other business that would have this, and you say, well, there's a 1 in 2,768,000 that I find a block in the next 15 years, right? And then you have to extrapolate how many times is Bitcoin going to have in that time, right? And what will the price prediction be in that time? It's just it's not very business savvy. It doesn't make a lot of sense, right? So when we're looking at this, the question that I really have at the end of the day is, how influential are Bitcoin miners over the price of Bitcoin anymore? Like I said, due to these factors, I would say that Bitcoin is influenced by miners from a price perspective less than it has been in the past. And I think that we will see diminishing returns on the effect of miners on the price of Bitcoin as we move forward. And the effect of the price on Bitcoin will be purely dependent on the demand for use of Bitcoin, and seeing that, unfortunately, the demand for Bitcoin, because most blocks are empty right now, statistically, is not very high. And I think that's why we are seeing a suppressed market this time around. I think it's a combination of factors. We could say, macroeconomic factors are playing a part. Yes. But I think it's just the way in which the miners are not having as much influence over the price. I mean, you can see this as well in an accelerated timeline, funny enough, on Kaspa, where, 91% of the Kaspa is in circulation now. Miners have almost zero effect on the price of Kaspa at this point, right? And so Kaspa's price is purely dependent on the availability in a centralized exchange, hence why MEXC has so much influence over the price of Kaspa. And so it really will come down to who has the most influence. It'll be the largest holders. And then if there's no demand for it, then the price will stay, will not have the same euphoric effects that they have had in the past, right? So that's kind of what I'm looking at as far as this goes. It does say, following this up is that top players in the mining space are expanding still. And I think that has been apparent through April, but that has changed over the past couple days. So when they're writing this and they're talking about in the April timeframe, miners were, and you could say, all right, well, they're selling off so I'm giving the counter argument, right? They're selling off more of their Bitcoin to invest in more hardware to mine, which would mean obviously still in a bullish cycle moving towards increasing the hash rate of Bitcoin. Of course, bear market and bull market hasn't had as much of an effect on growth in the hash rate of the network. But you could say, well, they're looking at this and saying, okay, well, we're going to sell off 115% and then we're going to increase the amount of hash rate. Now, that looks good in April, right? Because the hash rate's going up. Doesn't look good right now. We've had a 3% plus drop on the amount of hash rate on the Bitcoin network since the beginning of May. And so we're seeing a huge drop off in the amount of hash rate. I mean, frankly, quite a bit, right? We're down in the 800 exahashes, I believe. When we were crossing 1,000, what exahash, zettahash, right? So when we were crossing into the zettahash just in April, so or not in April, near last year. So there is miners are coming off of the network. Now, is that all old hardware and we're just waiting for the new hardware replacements? Potentially, right? And that's where tariffs could have had an effect. And those macroeconomic factors, right? Because you essentially, these public miners are preparing for upgrades to become more efficient. They sell off in bulk a bunch of their older hardware, S19s, S19 Pro Js, all that sort of stuff. And then they're investing in the S21s and so on and so forth. There is a little bit of evidence for that. I think the best evidence for that is the price. Let's go to BT miners because I saw this the other day. I don't remember what they're I just want to search BT miners. Hold on, let me just log in here. We'll get the link. No, not a CAPTCHA. Give me a second, guys. They're going to CAPTCHA me. And I am failing horrendously at the CAPTCHA. Oh my God. No. It never ends. It never ends. There we go. So I thought this was it, right? I must have just typed it in wrong. ASIC miners. Bitcoin miners. And I saw this the other day. They had a bunch of S19J Pros for $360 a piece right now. Which tells me that's the evidence I have for, well, the large miners are, selling off in bulk a bunch of their used equipment and then going ahead and, upgrading. So maybe that's what we're seeing as far as the hash rate goes right now. Potentially, but at the same time, it's like most of those are unprofitable in a lot of scenarios. Not as bad as you would think, right? So at 10 cents a kilowatt hour, I think you can make like the S19 Pro profitable, or at least break even. I mean, with firmware and all that, but the large companies typically aren't mass deploying firmware like that. They're just getting rid of the old hardware, bringing in new hardware, and then moving from there. So I think at this point, like I said, it's really just, I think, up in the air as far as how much of an effect miners actually have on the price of Bitcoin anymore, right? And here's more evidence for that, just anecdote, like obviously, I guess not anecdotal, but because it is statistically like in the report, right? Miners sold off a bunch of their Bitcoin in April and the price of Bitcoin went up in May. Pretty much back to back. You would expect the inverse of that to happen if miners were having more of an effect on the price, right? And then on top of that, they also said that a shift is taking place in how miners are securing new hardware. Several public firms have inked deals with Bitmain that allow them to pay for mining rigs in Bitcoin while retaining the right to repurchase their coins at a predetermined price. So that's a hedge against further price rallies. This is extremely dangerous. It's akin to the loans, hardware loans. This has happened before. Core Scientific went under from it. A few other miners went under from it. And what they were doing is it was a little bit different. They were put the inverse, it's not the inverse, but they put the hardware up for sale. Let me see if I can articulate this properly, or up for loan. They got a loan on the hardware. There we go. And this is back during the previous cycle, right? So they got loans on their hardware at the value of the hardware at the time. So this is a little bit better, but not way better, right? And then with those loans, they bought more hardware. Now, Strategy's been doing this with Bitcoin itself, where they buy up a bunch of Bitcoin, they take a loan out on the Bitcoin, they buy more Bitcoin. This is what rich people do to game the system and never contribute to society. But this ended up being a terrible practice for Bitcoin miners during the previous cycle. It made a lot of them go into bankruptcy. And this was due to the fact that the miners depreciated significantly in 2022 and 2023. Now, this is a little different, like I said, in the fact that what they're doing is they're essentially saying, we're going to buy the miners in Bitcoin for the value of the price of Bitcoin right now, but we have the right to buy the Bitcoin back at a predetermined price, whether that's like a 5%, 10% uptick or whatever. And then that gives them the ability to, if the price of Bitcoin goes up, buy that Bitcoin back, sell it at a profit, and then pay off the miners. This is still risky because it'll all depend on like how long they do that for, right? Like, let's say we go into another bear market at the end of 2026, 2027. These miners never did that. The price of Bitcoin goes below that of which they could buy their Bitcoin back for, and then bada bing, bada boom, more bankruptcies. Bitcoin and crypto get an even worse name out of the whole deal. And then the crazy thing is nobody's learning from the past. And it's such recent memory. It's crazy to me that nobody's learned from the past. Like I said, this is a little bit better. It's like a little bit better. But the fact is let's say, they spent, and what is the price of Bitcoin in May or whatever? Let's say 90K. Let's say there's to make it easy, let's say there's a 10%. So they could buy it back at $100,000, right? They buy a bunch of miners with Bitcoin valued at 90K. The Bitcoin goes up and then they can buy it back at 100K. Well, at right now, obviously they'd be in profit. They could buy the Bitcoin back for 100K, and then they'd be 6K to 9K in profit. The problem is they're going to hold that out a lot longer, right? And if they continue to hold it, because people always get into this mindset of it's just going to continue to go up only, up only, up only. And then the market comes falling out. The price of Bitcoin falls below 100K, and now they're in debt. And the value of the miners depreciate on top of that, and the Bitcoin, because Bitcoin and miner depreciation valuation is about the same. I think Bitcoin holds a little bit better, right? Now that we're talking about less of an influence of the mining process on the price of Bitcoin, but you still end up in a position where you're underwater. And so, obviously it's going to be a whole timing thing, but nobody can time the market. So what are we really doing here, right? I think it's extremely difficult to play that game, and I think that it's extremely dangerous as well. On top of that, mining stocks were battered in the first quarter. They have bounced back by more than 60% in April alone, though most remain down year to date. Only CleanSpark and Marathon Digital are in positive territory for the year. So we'll have to see there. This is the other thing that's happening at CoinDesk too, by the way. They are starting to generate AI articles. So a disclaimer, if you're reading over there, parts of the article are generated with AI assistance and AI tools. So make sure you're validating facts and figures between, what they're stating, and then go pull up something like the Hashrate index. Make sure the numbers look right, and do your own research as far as that's concerned. This is probably going to be more dangerous for topics that are less, what do you call it? I suppose less popularized or less popular, right? So especially the altcoin market, stuff like that, I would be extremely careful. Now, Bitcoin did overtake Amazon as the fifth largest asset, hitting 2.16 trillion market cap. And that was here with the recent pump up. Bitcoin became the world's fifth largest asset after hitting an all-time high on Wednesday, which pushed its market cap to 2.16 trillion. Though the crypto's price consolidated lower after hitting a high of $109,400, its market cap passed Amazon, which stands at 2.15 trillion. And here's the chart here. It's in fifth place, just under Apple. Well, quite a bit under Apple, to be fair. NVIDIA, Microsoft, and then gold. Gold is the largest asset by far, standing at 22 trillion market cap, followed by Microsoft and Apple in the 3 trillion range. And as a result of the surge in Bitcoin's price since the win of President Donald Trump, BlackRock's iShares Bitcoin Trust recently became the fifth largest exchange-traded fund by inflows this year, as it took in roughly $9 billion from investors, according to data from Bloomberg senior ETF analyst Eric Bakshunas or something like that. Now, negative impacts of ETFs. I mean, we have to point that out as well, right? There is a clear negative impact of ETFs on Bitcoin. What is it? Well, less transactions on the Bitcoin network, meaning less fees for miners to make, which means miners, once again, are hurting and not influencing the price of Bitcoin as much. And they have an even less effect on it because, or due to, in part, by ETFs. And so then we go back to talking about Satoshi's vision. We go back to, peer-to-peer transactions. And then we go back to, well, what if you get into a situation where an entity is purchasing up all the Bitcoin, doing nothing with it? Well, you drive demand down and therefore you suppress the price of it in valuation against fiat, which is frankly what's been happening here recently. So obviously big purchases after they make the paper sales drive the price up, so on and so forth. But we're not seeing that transactional activity on the network itself, which I think, honestly, I just think is one of the reasons why this cycle did not have as high of a euphoric feeling, at least so far. Now, there are things that could break it out, and maybe it does go run up all the way to 210,000. History doesn't always repeat, but it rhymes. We are still rhyming in the fact that we did break an new all-time high somewhere between 6 and 12 months after the halving, right? We have a second all-time high here just happening a second time between the 12 and 18 month phase. We should continue to see a run up for the next 18 months or so, right? With some sort of suppression. The question is, will it be as impactful as it has been in the past? And I'm saying the ETFs in general seem to impact this negatively and not allow it to go as high. Minor signals of selling off more Bitcoin than they mined for the month in the middle of what should be a bull run says probably not as high, right? And so, and great, we just broke 110,000. So when we've talked about this before, right, we've said, okay, well, we're going to see somewhere less than 210,000, which is the original prediction, but more than 120,000, right? So that's kind of where we're sitting at it. And look at that, Bitcoin just hit new all-time high of 110,000. Oh yeah, 110,384, 397, kind of ticking around that rate. And so, I mean, we are lined up to see that. This was expected based off of the halving cycle. The question is, how high? So I'd like to hear in chat and of course down in the comment section below, like, will we see that euphoric rise in Bitcoin over the next 6 months when we would typically see it? And then will the bear market be impacted as bad as it has in the past, right? Retracing all the way to previous all-time highs or lower, right? Is that something that we should be expecting? So I'd like to hear your price predictions. Like I said, I think I've said previously, I think it's going to be a little bit lower than I had initially anticipated. Initial anticipations were 210,000, somewhere around there. Following that up, I said, you know, I'm adjusting that initial just based off of, well, the suppression of the price of Bitcoin, the behavior of the miners, all that sort of thing. I'm looking at, you know, that $150,000 range, somewhere around there now. But obviously it looks really good right now. So that's very nice to see. Will that impact, you know, we have two very good things happening for miners right now. We've had a 3% dip in the hash rate of Bitcoin, and we've had an increase in price, right? So that does mean in general that we are going to start seeing, hopefully, you know, we can go to hashrate.no right now and take a look, an increase in the profitability of Bitcoin miners, right? So we'll go to Bitcoin. I don't know if this is updated for the price of Bitcoin, but hopefully. And a good one to look at is always like the S19. That's what most people are probably still mining with, last I checked. And it's in the negative right now. That's at 10 cents a kilowatt hour. Let's say typical hosting rate in the US, 8 cents a kilowatt hour, right? I think it's 8.5 cents, somewhere around there. So for miners, really, it's looking a lot better than it has in the past. I was trying to scroll down to the S19 again. Maybe I just blew past it. S19 Pro Plus Plus. There's the S19 Pro, which is almost back in profit. If you have firmware on it, it's in profit now at the hosting rate. And then the S19, losing about $1 a day. I think you make that up with firmware pretty easily. So there you go. It was looking way worse, right? It was looking like, I think these were losing a few dollars a day for a while and was even losing money with firmware applied to them. So Bitcoin still has a ways to go for last generation hardware to be profitable, and for basically the price of the S19J Pro, for example, going up. And once you start seeing, and I think like from a mining perspective, like the signals you want to see is like these miners going up, right? And even if if you're not a Bitcoin miner, right, track prices of Bitcoin miners. Because that can also be an additional indicator, right? So if the price of S19s go from 300 a pop to 900 a pop, you could probably expect the price of Bitcoin to be following suit if it happens before. Typically, you know, a lot of people say like hash rate follows price. Some people say price follows hash rate. I think this is the first cycle in which we've kind of questioned that more, right? Because price has typically followed hash rate in the past. Like I said, it still seems like miners aren't having as much of an influence on it. Let's look at some predictions in chat. Scott says 210 to 240 and retrace to 40K in the next bear market. That would be below previous all-time high by pretty significantly, wouldn't it? I would think retracement to like, what, 50, 60? I guess that's close enough. Wuchin 2003 says 135K and down 85% afterwards. That would be massive. I think that would be a little too much. And Ahmet says my prediction for the cycle top is about 180K, but what do I know? Wuchin says 110K right now. Oh, that's just because we just hit 110K. I'm like, his prediction's 100. Come on, bro. It's going above 110. 120 minimum, right? Like we're going to hit 120 and then we'll be, you know, at that point. I've talked about like, obviously I buy mining hardware in the bear, sell it in the bull. It's getting to that last 6 months of having to, you know, sell off the, you know, at least last gen equipment in this bull run. And I'm really questioning what the timing of that's going to be. I'd like to hear y'all's thoughts. I'm kind of thinking October to February time frame, listing all the last gen hardware. That's personally what I'm looking at from a business perspective. But I'd like to hear what you guys think. As far as GPUs go, I mean, you're profitable on GPUs right now, but with really high-end GPUs, right? So if we wanted to look at like something that everybody has, the 3070, Cubic's profitable, but only 10 cents a day. It's still pretty lackluster, and that's at 8 cents a kilowatt hour. You're not going to get GPU mining hosting at 8 cents a kilowatt hour anywhere either, just because the overhead's too high. But, you know, from home, I think you could probably find a place, you know, depending on where you live, maybe viable. The thing that's happening right now that's making GPU mining more profitable is the launch of the new SRB miner. We'll cover that in just a second. Let's talk about the Texas House bill for the strategic Bitcoin reserve. All of these things. So the strategic reserves, the ETFs, these types of topics, I kind of have a love-hate relationship with, because it's like, okay, we're going to increase adoption, but we're going to remove user participation. So from a mining perspective, once again, empty blocks. And if you have empty blocks, that's low demand. If you have low demand, obviously the price is not going to be able to go as euphoric as it has in the past. And so when we look at these, it's like, okay, well, there's a little bit of positive, but from a mining perspective, it's not having as much of a positive effect. and miners are just getting hammered. Now, what I've said before is, stateside mining, like if we don't get energy prices under control in the United States and fast, Bitcoin mining is going to go overseas 100%. There's not going to be any Bitcoin mining stateside without a significant shift in the cost of energy stateside. There just has to be competitive at this point, right? And I've also said that also means that ultimately, in the long run, tariffs have zero effect on the amount of Bitcoin mining going on in the United States, because the upfront cost of the miner is trumped by the low cost of the energy, right? And so it really comes down to energy at the end of the day. We're just not seeing it. And miners are getting squeezed hard, right? We see it over and over and over again. Miners shouldn't be squeezed right now. And that's the scary part, really, I think, at the end of the day, is because mining directly impacts the security and the integrity of the network. And if miners are unable to stay profitable and generate cash flow in what should be a bull run, and the price is pumping, but it's like as the price pumps, the difficulty goes up and miners can't make anything, and energy costs skyrocket, making the miners get squeezed even more. It's like, well, we're just going to lose security on the network at some point. Like the price of Bitcoin needs to go parabolic almost for mining to be viable in the United States as it sits right now. And it really has to be above like the 120 to 150 market to make it useful at all. And that's just the way it's going to have to be, I think, in general. And so we'll just have to sit back and wait and see, if some of the Trump administration promises about getting energy under control is going to take place. But that aside, there is a Texas comptroller is establishing a Bitcoin reserve, and they're going to invest in select cryptocurrencies based on market cap criteria. So the Texas House of Representatives has passed the third reading of SB 21, a bill that seeks to establish a strategic Bitcoin reserve in the state. The bill passed in a 101-42 vote and will now go to Texas Governor Greg Abbott to either sign into law or veto. SB 21, authored by State Senator Charles Schwertner, there we go, something like that, establishes a Bitcoin reserve that is managed by the state's comptroller. The legislation allows the comptroller to invest in any cryptocurrency with a market cap above $500 billion over the previous 12-month period. I think maybe that means it has to maintain over $500 billion for the past 12 months. Let's look at the top ones and see how many that includes. What was that? Million billion, is that right? So that would only be Bitcoin at this point. Am I reading that correctly? Because the market cap of Bitcoin is 2 trillion, right? But the market cap of Ethereum is only 300 billion. And the requirement would be consistently over 500 billion for the past 12 months. So currently the only cryptocurrency fitting the requirement is Bitcoin, just as we verified on the chart. Before the vote, State Representative Giovanni Caprioli, Capriloni, I've heard this name like 1,000 times in the news too, and I can't even. No, I got in my head, dude. I can't do it. Said to the chamber that the bill was a pivotal moment in securing Texas's leadership in the digital age with the passage of our strategic Bitcoin reserve. Now we embrace the modern asset with traditional properties for future promise. The bill passed in the Texas Senate in a 25-5 vote on March 6th. Texas' economy is the second largest in the United States, with a gross domestic product of $2.7 trillion in 2024, according to 42K view. If Texas were its own country, it would have the 8th largest economy in the world. If Abbott signs SB 21 into law, Texas will be the second U.S. state to allow for the creation of a cryptocurrency reserve. New Hampshire became the first to do so on May 6th after Governor Kelly Ayotte signed House Bill 302 into law. Similar bills in other states have faced resistance as of late. On May 13th, Arizona Governor Katie Hobbs, a name I can pronounce, axed 2 crypto reserve bills. On May 6th, 2 Florida strategic Bitcoin reserve bills were taken off the table. Hobbs wrote in her veto letter, current volatility in the cryptocurrency market does not make a prudent fit for general fund dollars, which is pretty funny because it's been less volatile than even the stock market, if I recall. That was an article we went over not too long ago. The risky nature of cryptocurrency investing was a factor in the decision of Montana lawmakers to kill a possible digital asset reserve. According to Bitcoin laws, 47 strategic Bitcoin reserve bills have been introduced in 26 states. There are 13 active bills at the federal level as well. Abbott has expressed enthusiasm for cryptocurrency before and is expected to sign the bill into law. In a social media post dated November 2024, Abbott praised Texas as the home of the crypto mining, adding that it should become the crypto capital. Well, get the dang energy prices down in Texas too. Come on. Whew. All I get are letters about my energy costs going up. They're never going down. They're always going up. You know, it is what it is. Okay, so more news. So here, I wanted to read this one because, all right, yeah. We had a really weird election, and then we had basically the president of the United States, I guess, technically not the president when launched, and the first lady or first lady to be launch meme tokens on the Solana blockchain. They obviously came out in support of the, of cryptocurrency. And my initial thoughts obviously were this is a bullish signal because then we'll get better, we'll actually get regulation put into place. There will be eyes on it in general. The problem is the public sentiment, I think, was pretty negative on it from the perspective of obviously the price of those 2 tokens in particular, Melania token and the Trump token, taking significant pump and dump like behavior and crashing shortly after launches. Of course, this is the nature with all tokens and all cryptocurrencies. The number one thing to prevent this is by mining cryptocurrencies, right? I talked about this 100 times before, but the reason why mining makes sense is it is a fair way to distribute the initial tokens without interference. And if you just launch all of the tokens into the market at the same time, it's inevitable that you're going to have what appears to be a pump and dump. That's just the way it is. So unless you're able to snipe the token, and by that I mean purchasing the token like literally within the first millisecond of it being launched, it's usually not a good idea to purchase it within the first couple weeks, something like that. Outside of some very rare cases, right? But the question that's been coming up is like, how will that impact, of course, the regulation surrounding cryptocurrencies that the president of the United States himself had launched, essentially was effectively a meme token. And so we have the U.S. Securities and Exchange Commission Chair Paul Atkins fielding questions from lawmakers about the Trump-linked meme token and whether connections to crypto entrepreneur Justin Sun could pose a problem. Atkins, less than a month in the role, was asked on Tuesday during a House Appropriate Committee, which oversees the federal agency funding. Lawmakers asked about his approach to crypto regulation. The SEC paused fraud case against Sun and recent activity involving Trump-linked digital assets. Representative Glenn Ivey of Maryland pointed to events in the lead up to Trump's January inauguration, noting that Sun's company, Tron, purchased $30 million worth of tokens from World Liberty Financial, a decentralized finance firm that says it is inspired by the president. Of course, it's considered to be a part of the Trump family. Later, the SEC moved to stay its fraud case against Sun and his companies, including Tron, effectively putting it on pause, which, I mean, if we're being completely honest, Tron is probably the best token to send because it's supported everywhere and the fees are ridiculously low. But I have my qualms with Justin Sun in general, but I think that's, the same with any other human being. Meanwhile, Trump has his own meme coin circulating and will host a gala later this week for the top 220 meme coin holders. Sun said he is one of those holders in a post on X early on Tuesday. Honored to support POTUS and grateful for the invitation from Get Trump Memes to attend President Trump's gala dinner as his top fan, Sun posted. Quote, "This frankly to me smells very bad," Avi said. "My hope would be that the SEC would be investigating that piece." Atkins said Sun's case was an active case and noted that the SEC has said the meme coins are not securities. So that's interesting that the SEC has said that meme coins aren't securities, by the way, too. I'm trying to recall. I thought we were still waiting on meme coins. Did I miss that article, guys? Did I miss that news? I know proof of work coins aren't, and they recently said, what was it? What was it last week? I might have to look at my notes. Let me look at this real quick. Because I thought we covered this last week. What was it just staked coins? Okay, so that's maybe that is part of what happened last time. Let me look at this then. Meme coins, securities. I didn't know that this was put into law already. I thought they just said it may not be. Okay. So there's no official ruling, right? We're waiting on official rulings of all these. Most meme coins are not securities. That doesn't mean all. That doesn't even mean that they named Trump coin in particular, right? Excuse me. Got a runny nose today. Dogecoin, and I hate these articles, dude. Okay, quick nerd rant. Dogecoin, the original meme coin and sixth largest cryptocurrency by market cap, rose 3%. The token type. Here's the deal. Dogecoin's not a meme coin or a meme token. There's an inherent difference between Dogecoin, which is a layer 1 blockchain that is proof of work, and Trump token on the Solana blockchain, which is one, not layer 1, it's on layer 2, and 2 is not mineable or mintable through a process that's fair. Okay, two completely different things. And then they say like meme coins, and they use Dogecoin as the primary example. So like, I don't even know who to believe in. Like, clearly, like, most of these people just don't know what the hell they're talking about anymore. It's just, so like, how do I guess there's still just murky area based on the fact that we have people in charge that don't understand the technical differences between all of these things. But yeah, let's see. So on Tuesday, Atkins said in a prepared testimony that he planned to approach crypto regulation through notice and comment rulemaking rather than regulating via enforcement. A key priority of my chairmanship will be to develop a rational regulatory framework for crypto asset markets that establish clear rules of the road for the issuance, custody, and trading of crypto assets while continuing to discourage bad actors from violating the law, Atkins said. Representative Chuck Edwards Republican of North Carolina, asked Atkins whether the SEC's new crypto task force would require additional funding. The task force, formed earlier this year by former acting chair Mark Ueda, is led by Commissioner Hester Pierce and aims to hold industry roundtables and clarify how securities laws apply to crypto. Quote, I am not sure exactly, Atkins said. It's staffed by current employees and Commissioner Pierce is leading it, so it's not taking any additional funding. So we don't have any real clear answer on this in general. I think it's interesting overall. I don't think, obviously, I think getting the case dropped against Justin Sun's probably for the best in general. It's kind of funny, like who gets nicked and who doesn't get nicked in all of this. Because a lot of people are doing similar things and now are serving time, right? So it's like, it's kind of funny, right? I guess it's akin to like, I don't know, Mary Jane, right? How there's like, now there's people still in jail for possession of Mary Jane. And then it's like, legal now. But it's the law is funny. And Bitcoin's ready to vaporize shorts once price discovery above 110K begins. Of course, that has just begun. Sorta, right? I guess we fell back below 110 there for a brief moment, but it's pretty much beginning. I think we already saw some shorts. I think it was like $60 billion worth of shorts liquidated, or 60 million, sorry. Billions will be liquidated over 110, I guess it says. Bitcoin is 11 days from potentially setting its highest monthly candle close in history after achieving a record weekly close of 106,407 on May 18th. Bitcoin could secure a new monthly high by closing above $102,400 this month. With respect to its current market trend, Bitcoin is inches away from price discovery period, as noted by crypto trader Zhell. Price discovery in this context refers to the process where buyers and sellers interact at an undefined or non-traded range to determine the market price of an asset. A break above Bitcoin's all-time high of 110,000 would initiate a price discovery phase, driving Bitcoin into an uncharted trading range with successive higher highs until market participants establish a new equilibrium between supply and demand. Cointelegraph reported that Bitcoin is close to confirming a golden cross on its daily chart, which has historically preceded 45 to 60% price rallies. Such a move coincides with the probability of Bitcoin hitting new highs this month. A monthly close near 110,000 would mark 15 to 17% gain for Bitcoin in May. So we're talking about still going up, another 3x from there, 3 times from there. So, like over 120K if we were to see that price, the historical price rallies, right? Easily. Yeah. May performance since 2019. This would significantly surpass the historical average monthly return of 8% per month. Bitcoin researcher Axel Adler has noted a key technical pattern in Bitcoin's current bull cycle, pointing to 3 recent instances of compression, a period of tightening price ranges measured by rolling maximum minimum over 180 days. The chart indicates that this compression often signals an impending breakout, with historical precedent set by the 2017 rally when Bitcoin surged to $20,000 from $1,000. Using Bollinger Bands alongside the price range suggests that volatility is building within the current cycle. The third compression phase in 2025 mirrors the 2017 cycle, where the Bitcoin halving events and supply shocks fueled retail FOMO, driving major price rallies. Here's the question. Retail FOMO. That's going to be interpreted this cycle by boomers swapping their 401k into a Bitcoin ETF, not on-chain transactions, right? Just hypothetically, the retail FOMO looks a lot different this cycle than it has in any other cycle due to the fact that most people will be purchasing paper Bitcoin outside of the blockchain itself. Is that a fair theory? And in that case, the absolute top would be suppressed as a result because you're not having that affect the actual Bitcoin itself and the amount of manipulation that these large companies like BlackRock will be able to perform, right? I don't know. Just my tinfoil hat of how this is going to play out. I think it's a little bit different. They didn't give any price predictions here. We already saw some liquidation happen, like I said. I guess it did. It was billions in shorts. I was right. I don't know where I got the 60 billion. That would be a lot. It must have been like 6 billion. I don't know. I don't remember what it was. I saw it and I didn't save it, and that is on me. I apologize. But we did see, billions liquidated from Bitcoin shorts here today. So good news as far as that's concerned. I think leveraged short traders should all go bankrupt and head on over to hell on top of it probably. But that's my that's my personal opinion. It's okay. It's fine. I get it. People are trying to make money, but come on. Short leverage is gambling at the end of the day, or you're actually manipulating it, in which case there's bigger issues, right? Now, I've been saying that, there's been this talk for quite some time since the bear market began that crypto miners, specifically GPU crypto miners, would move into AI from cryptocurrency mining. And I had brought up that obviously the infrastructure for that is completely different. When you're talking about cryptocurrency mining, you need a lot of GPUs, very few motherboards, very little memory, very little processing power, and very little bandwidth, right? Bandwidth being internet speeds and capacity, all that. When moving into AI, you're processing large data sets, which requires fewer very powerful GPUs, a lot of memory. In fact, I think right now for most models, 64 gigabytes is like minimum requirement of system memory, and a processor that can support all that, plus for multiple GPU setups, a processor that can also supply enough PCIe lanes to transfer that data from system memory to video memory on the GPU itself, thereby making the direct transition from cryptocurrency mining over to AI to be, extremely costly. And because of this, I had kind of said, I don't think it's really realistic. I did have, of course, some smarter, richer people than me also have these insights, via like Foundry and so on. But, maybe I was wrong. There is one that is turning into a success. CoreWeave adding billions in market cap. Regulatory filings show that NVIDIA increased its stake in CRWV by the end of the first quarter to 24.2 million shares from 17.9 million shares. Shares of AI cloud computing company CoreWeave surged on May 16th after chip giant NVIDIA revealed a large ownership stake, signaling growing corporate and institutional interest in the newly public company. CRWV stock climbed as much as 26.3% in New York trading, pushing its market capitalization above $38 billion. Trading volumes were more than doubled the daily average, according to the Yahoo Finance data. The stock was last seen trading around $81, up 23% on the day. CoreWeave's rally was sparked by regulatory filings from NVIDIA showing that the company owned $900 million in CRWV stock at the end of the first quarter. The value of the holdings has more than doubled since March 31st, assuming NVIDIA hasn't sold any shares since then. As CNBC reported, NVIDIA's ownership stake at the time of CoreWeave's initial public offering was 17.9 million shares. CoreWeave stock has gained more than 100% from its IPO price of $40 in late March. It has vastly outperformed the NASDAQ Composite Index and broader U.S. stock market over that period. The NVIDIA revelations overshadowed CoreWeave's fiscal first quarter earnings report, which showed a 420% surge in revenue, but also a 487% spike in operating expenses. So that's not good. I love how it's always that thing. It's like when Musk says like, the stock of Tesla is overvalued. It's like we make these like the stock market's not real. Like you're not adding, like the fact is like you're not at what, how much was this? It was up 23%. In a day, you're not adding 23% more output at an individual company at this capacity, at this size, right? Like that's just not how it works. So it's just kind of funny. And then to make matters even worse, they are under 67% in over by 67% in expenses. Now, obviously the prediction or the reason the stock goes up is they're expecting, well, obviously those operating expenses are being backed by NVIDIA and then that will, pay off in the future. It's just kind of funny. In general, right? But CoreWeave's origin story began in 2017 as an Ethereum mining operation called Atlantic Crypto. The company began transitioning away from digital assets the following year after the onset of the bear market. So 2 bear markets ago, I suppose, which is pretty crazy. By 2019, it had rebranded to CoreWeave and began leveraging its GPU infrastructure to provide cloud computing services. The company then rode out the AI boom and its unique relationship with NVIDIA to secure a massive IPO launch. CoreWeave has landed other major investors, with Cointelegraph reporting in March that OpenAI reached an $11.9 billion deal with the company to supply AI infrastructure for the ChatGPT developers' massive data needs. CoreWeave is operating in a much broader cloud computing industry, which is forecast to become a $2 trillion behemoth by 2030 as AI applications gain mainstream adoption, according to Goldman Sachs. It's funny because the weekly rant says they don't want the average person having Bitcoin. They also don't want the average person processing AGI either, right? And that's the thing. Like a lot of us have talked about in the past. Well, we got to move over to AI and proof of useful work and decentralize AI and do all this sorts of stuff. But it's clear that like the leaders in AI are being run and working directly with NVIDIA, with actual NVIDIA investment in the billions, right? They have access to, obviously, because of that, the fastest GPUs. They're going to outpace anything that an individual could ever purchase. And it's not like crypto. It's not like crypto in the fact that, yes, I can build an AI rig here, but to be frank, it's not going to be profitable for me to do so. If I want to build my own large language model, okay, cool, that might be fun, can tinker around with it, blah, blah, blah. But, being extremely profitable on it, probably not going to be the deal, right? There are certain, because we're early enough in it, certain services, whether it be Vast AI or Chlor AI or Salad or so on, name one of the services, that will pay you for that processing power for now. But it's going to get significantly outpaced, and outpaced a lot faster than crypto did, right? Like crypto took a long time for it to get to where it is now, where unless you're already a large institutional ASIC miner that works directly with Bitmain, you can't be competitive to stay in business at that scale, right? Or even at a smaller scale, it's very difficult to. So then obviously all the miners turn into degenerate gamblers and buy solo miners and never make their money back. Or most of them don't, right? So and then the funny thing is Bitmain's manufacturing those chips anyways too. But with AI, this is happening a lot faster, right? So there might be a while where you'll find some success in renting out hardware to process AI data sets or whatever. But eventually, like, it's just going to be NVIDIA doing all the work themselves, right? The question is, too, I always have this question because when I've looked it up, it's like, because obviously when something new comes out, I'm like, how do you make money with AI? Like, And really, outside of like building your own chat APIs and selling that to a company, which is extremely difficult to do, there's not like a direct way to generate revenue with AI without like obviously building a business, focusing on that, and then like creating a product, right? So it is what it is. Odin, I know you really want to push solo mining, but like, here's the deal. You're just wasting money. And it doesn't, like, you could say it provides more security, but no more than building a node. And you can build a node for free for decentralization, not necessarily security. Because the fact of the matter is, like, a gigahash solo miner is not going to outperform a hacker that hacks the 51% of the hash rate of Marathon Digital, right? So it doesn't really add any security. It could add decentralization, that's a valid argument from a technical perspective. But at the end of the day, so does building a node, right? And one costs you money and one doesn't. So if your reasoning is to make the network better, just build a node. That's my humble opinion. And then if you if you want to gamble, like, why not just use a CPU too? I mean, I don't know. They're fine. I get it. And I get that everybody wants to sell them and they want to give you the affiliate links are a big deal. There's going to be a lot of reasoning behind it. But the fact of the matter is if you're purchasing a solo miner as a business venture, like, it's just like buying a lotto ticket. Now, there are cases in which, like I've talked about, right, where you have Digibyte, for example, that you can mine on SHA-256, and you can generate some revenue off of that. I think that was a thing that makes sense to me. But overall, like, it's one of those things, like, I'm not going to go here and be like, you should buy a solo miner, because there isn't a tangible benefit, and all it really is losing money, right? Like, that's all it really is. And okay, I only lose $13 a day. That can be an argument, like Snarks is saying in chat. Fine, if you want to do that, that's okay. I don't think the promotion of it is technically sound or business savvy. Like, I think if you are coming on and being like, I am somebody who can tell you how to generate passive income, buy my miner, the way they're generating passive income is selling something that will probably never meet ROI to other people. And I just don't like that. I don't like that at all. And I really honestly think the type of people that do that are trash human beings. I just do. Like, the fact is like, there's not a viable business model that you can say, okay, let's go back to like GPU mining Ethereum in 2016. You could buy a GPU. There was a reasonable payoff time for that single GPU. You could then reinvest that revenue to buy a second GPU and build a business, right? That doesn't happen with the solo miners. Like, it's not a legitimate, and I don't even like the term passive income, but that's not a general passive income strategy that makes sense, right? And so I just don't think, I think that we need to really be careful with like how we're pushing that, right? Now, I do think in the future, what happens, here's what I do think happens, right? Working in the power industry, seeing like what they do with power walls and solar panels and energy storage and stuff like that, okay? I do think you do end up seeing some form of solo miners. They won't be called solo miners, but some form of Bitcoin miners that will be an option for you to install into your home, and the power company will mine on them, and then or the power co-op, and then you will get, you'll get an incentive on your like power bill for running that miner, akin to like running a Nest or providing battery backup to the grid along those lines, right? I think that is the Bitcoin miner in every home end state. I think that will be what it will end up being and looking like. The fact of the matter is it will be like all the rest of those, right? It'll be like, well, my Nest saves me 30 cents a month, right? So it's going to be like that. And maybe they'll have an option of like, oh, you can mine to your own wallet with it, and then you could point to your own pool. Maybe they'll have options like that for people. I think by and large, it's going to be to reduce. I think by and large, what it's going to be is the power companies are going to have miners in every homes. They're going to give incentives to the users. And when the grid usage is low, they will utilize the Bitcoin miners to keep the load average up. And when the load average goes up due to, obviously extreme heat or extreme cold, then they will remotely power down all of those Bitcoin miners that are in people's homes, balance out the grid, and that's how they're going to help balance out the grid. Like, that's where I see it going in the future. And that's probably the best business decision overall for power companies and co-ops too, except for, and this is the elephant in the room and the big barrier to entry there, the ever increasing efficiency of cryptocurrency miners for them, right? So the problem becomes, Bitmain coming out with a new, more efficient miner every year. What does the churn rate look like on that? Typically, on, let's say like a typical IT department, you're going to have a 3 to 5 year upgrade range for new equipment, right? Like, you get your laptop, you keep it 3 to 5 years in the IT department, you trade in, you get a new one. That's kind of the churn rate. Can you survive? Can you survive on that 3 to 5 year from an efficiency perspective on Bitcoin? Not right now. Maybe in the future, because eventually you get, law of diminishing returns, right? So you get to the point where you're able to say, well, like, we've advanced this much, so advancements are going to slow down, right? So I think that'll happen overall. And we got people in chat saying Bitcoin's going, I don't see Bitcoin going up anymore. It's just 110. Tell me when it's 120, bro. It's going to bounce around 110 probably for the day, right? Speaking of, though, so I wanted to say congrats to CoreWeave, I suppose. Give my thoughts on AI, where it's headed. I think it's going to accelerate so fast, and working directly with NVIDIA, I think new startups are going to be extremely difficult. Outside of a software engineering perspective, which even then, like, I guess like the LLMs are going to do most of that. I don't know. I don't know where that goes, but let's get the Hashrate index roundup. Obviously, a lot is changing right now as we speak, but a mixed bag for this week's update. Bitcoin is up, difficulty is up, and fees are up, but hash price is stable. And obviously, we want to see hash price go up. I did see it go up, though. So let's go do this. Hashrate index. I think I have it here. That is this. I didn't want to see this. I want to see the actual. Where is there? So now it's Hashrate index premium. Like, what are they doing? I can't look at the Hashrate index anymore. Hashrateindex.com and go down here. Where's the hash rate index? Here we go. Ooh, it's going up. It's at 57. I think the thing was like, look at that, one day in 2024. It's relatively flat over the past year, right? So I'd say no significant changes is fair. I think for the past 24 hours it's technically up. Transaction fees constituted 1.79% of block rewards, totaling 57 Bitcoin, equivalent to 5.95 million. That's not very much for the week. Bitcoin trended up throughout the past week, increasing by 3% from 101,000 to the current 105,000, obviously 110,000 now. So up even more from there. And the hash price increased by 10% from $50 to $55. So I guess we're up another, what, 2%, something like that? 5%, sorry. 5%, give or take 4 to 5%, somewhere in between there. At the $57 range right now. I think the expectation is needed to go above 60. And the Bitcoin hash price decreased by 3%. The network hash rate fell by 3.16%, with the 7-day simple moving average moving from 887 exahash to 859 exahash. This is obviously good news for us right now. And the 30-day SMA is currently standing at 871 exahash a second. And the latest difficulty adjustment took place on May 17th, increasing network difficulty by 2.13% to 121.66 T. And blocks are found at an average of 9 minutes and 52 seconds over the past 24 hours. We currently estimate an increase of 1.18% for the upcoming adjustment, expected to occur on May 31st. I think what we would see, or what we would want to look at, would be hash rate. What's the current hash rate? 879. And we were at, wasn't it like 850 or something? So it probably will be a tick up in difficulty. Yeah. So there you go right now. I mean, hash price, I think, has to go up still pretty significantly for miners to be in the clear. But it is what it is at the end of the day. Let's talk about new GPUs coming out. We had the RTX 5068 gigabyte launch. It was launched at $299. Let me see if you can even pick those up at $299 right now. I didn't look yet. I need to see. Make sure there's no, yeah. So out of stock. It looks like you can pick them up for $320 at the cheapest from Gigabyte right now. And they are the 8 gigabyte models. You do get, I think, the DDR7. Is that correct still? Which could be worth it, or at least interesting enough to run and do some testing on. Yeah, it is GDDR7, which is good. I think it has a small bus though, does it not? Of course it does. It has to have a small bus. Where is the bus? 128-bit bus. I guess not as small as I would think. 28 gigabits per second. The memory bandwidth, about 448 gigabytes a second. That's actually not bad for memory intensive algorithms. It might be pretty good with the low power requirements that I assume this GPU has in particular. Where is it? Okay, so yeah, 64% more bandwidth for the memory. It's just a smaller bus than we would expect typically. And whereas the total board power is at 145 watts which is quite low. I assume we can get well under, 90 watts while mining with it. 448 gigabytes a second is, let's see, so here we go. We'll get the prediction. Hold on. Let's go. It would be half of 5080, right? 5080 is 960. So let's say half of 5080 on Ergo, so Autolicos. Say, that wouldn't be bad. Let's say prediction would be what is that? 170 or 150, 165, 165 mega hash on Autolicos at, like, what would it be? 90 watts or something? No, it would be 80. Yeah, 80 watts. That's okay. That's my prediction then. So I think the 5060 8 gigabyte will be around 165 mega hash a second at 80 watts. Let me know what you guys think for your predictions. I'm going to use a bio break real quick and I'll be right back. Okay. So the next was the Arc Pro B60. A lot of people were asking me about what I think about this card. I did watch some reviews on it. But there is apparently a dual version, which is really cool. This is the first dual GPU since the 7950 X2 or something like that. And each GPU has its own memory. And in particular, this is going to have 2 chips on it, both running at by 8. So a single card won't go up to by 16. It'll have 48 gigabytes of memory, 24 gigabytes per GPU. And it will support large models like DeepSeek R70B and QWQ32B. It does use a blower style cooler, which is obviously that would be good for mining if we were looking at doing it. But, people are like, oh, will this be good for mining? Each GPU is only going to have 456 gigabytes a second of total bandwidth, which is actually less than the 5060 gigabytes. So while there is a lot of memory capacity, the actual bandwidth isn't that high. And so unless it's in cases where, like, let's say Ethereum was still a thing and the DAG was growing significantly and you needed the capacity, this doesn't make sense. The other thing that's crazy is it only has a 192-bit bus and it's still running on GDDR6. Another concerning factor that I have with this particular GPU, and I can go to my Twitter and show you guys because I already wrote about this, is that this particular GPU is running, and we probably put it, let's see if I can, I thought I pinned it, but I guess I didn't, is running memory modules on the rear of the card. Here's a breakdown from Linus Tech Tip videos. And in the past, when this was done on the RTX 3090, albeit of course GDDR6X, which does run hotter, there are a lot of memory modules failing on the rear of the PCB in applications like crypto mining. Seeing this is going to be a 24/7 AI chip, I would have significant concerns with passively cooled memory modules on the rear. Even though it is only GDDR6, you're still talking about 24/7 workloads with no active cooling on the memory modules on the rear there. And I just think it's a poorly designed card in general. And I'm not that excited for it. I know like a lot of people were excited or are excited for it, but I mean, come on, 192-bit bus with GDDR6 and memory modules on the rear. It's like, how gimped can you get? It looks like trash to me. It's like, I would rather just buy two B580s, you know? And even then, like, if you want to talk about mining, like the Intel stuff for mining has been significantly gimped from drivers now for a while. You know, I think New England Crypto had built an Intel rig. I have a couple Intel rigs. And even the A750s that were doing really good at Ergo and Autolicos V2 stopped doing good due to driver updates, and those driver updates forced through on everything, and you just can't get them to perform where they used to perform. I don't know if they put some sort of lock or what exactly or why exactly that's happening. I do need to get in and do some research on that, just haven't really had the time. So the likelihood that this thing will be gimped when it comes to mining is extremely high as it sits because of where the drivers sit for the rest of the Intel discrete GPUs. So it is what it is. So there you go. I don't have high hopes for it. That being said, we do have a 5080 Super, a leak coming from Copite, who's been basically correct every single time he releases it. His Twitter post said the SKU number, etc. It will be 256-bit bus of GDDR7 with 24 gigabytes of memory at 32 gigabits per second, which would make it extremely fast, right? So the 5080 is only at 30 gigabits per second. It does have the 256-bit bus, but it only has 16 gigabytes. So we're getting 8 more gigabytes of memory, so higher capacity. We're getting faster memory speeds than the 5090. And remember, the 5080, because of its 30 gigabits per second memory speed, right, was faster than the 5090. Okay, or not faster, more efficient than, excuse me. So we're getting faster memory speeds, so presumably more of the memory at the same 256-bit bus. I think the 5080 Super might end up being an extremely enticing GPU for cryptocurrency mining from an efficiency perspective. So I am looking forward to this one. This leak looks cool. And that is going to push the bandwidth over a terabyte a second, right? So we have seen cards above a terabyte a second before. Obviously the 5090, 4090, even the 3090, right? But what we're getting on top of that is, in this particular model, a lower TDP we're also getting, basically more efficient, right? More efficient memory. The GDDR7 runs cooler. So as far as being excited for GPUs from a mining perspective, the RTX 5080 Super looks pretty exciting to me, right? We did mention, just a quick mention, legislation for the regulatory framework for stablecoins on the Genius Act has passed the motion to proceed to the consideration for a bill. The bill now goes to the amendment process. So I wanted to mention that. Also, Bitcoin Magazine's pretty big, and they are pushing their affiliate link for Salt Lending. Just a public service announcement as far as this goes. Previous cycles, bull runs, all these lending services, a majority of them went under and users lost their crypto. So I don't recommend using it. It's pretty disappointing that Bitcoin Magazine, a publication this large, I believe they have a lot of followers, right? 3.7 million followers. Obviously have no morals or ethics and are pushing affiliate codes that they shouldn't be pushing and are going to get people in trouble. But unfortunately, there's just a bunch of trash human beings in the crypto space. What can you do? It is what it is, dude. What are you going to do? Just make sure you avoid those types of things. They have historically proven out to be scams of some sort. People lose their hard-earned money and it's not okay, So don't do it. SRB Miner has a new launch, and they added the big hot news in the mining space has been the Tari coin. XTM is the token. They added dual mining support for this, as well as support on the AMD GPUs for it. The algorithm is SHA-3X, and this is on the, it will work on AMD and NVIDIA GPUs. SHA-3X prior to this was only mineable via CPU. It was merge mineable with, of course, Monero. I believe Rapid Mining had some how-tos on that. If you're interested, go check it out. Unfortunately, there's already GPU support now for it. So from that perspective, CPU's probably going to be falling behind. And if that didn't make matters already pretty terrible, well, I have more disappointing news. If you're like, oh, I'm going to go GPU mine this, hold up. Tari mining is now live on the E300 as well. Now, the initial support was a bitstream from Allfather. For those who are not in the know, Allfather is a developer that builds bitstreams to mine cryptocurrencies on FPGAs. FPGAs are kind of the step between GPUs and ASICs. So they're kind of this middle ground. They take very special programming. This means that typically you have higher developer fees, that sort of thing. He's kind of separate. He works with Osprey in some form or fashion here and there. Unfortunately, there's some infighting, I think, going on there because they launched their support for Tari on Allfather's bitstream, but they were working on a bitstream, I guess, behind his back potentially, or they just removed the dev fee. That's up in the air. I'm following that close over on Discord. I'll let you guys know what I find out. Either way, they're kind of butting heads. Some weird stuff going on there. Bad news for the GPU miners, though. As it sits right now, FPGAs do look to be getting support, which means obviously the GPU miners are going to end up getting pushed out just because of efficiency. And that does mean that Tari, I would assume, and XTM, the token, moves closer and closer to the ASIC realm, just because that's the way this whole game works. CPUs. And the thing is like used to, you had a pretty good buffer between like, if you take a look at something like Kaspa, you had months of CPU mining, maybe a year of GPU mining, and then FPGAs came and so on. Now it's happening so fast, it's like within weeks. So that's kind of disappointing, but it is what it is. I did decide we'll do a WTF is on Tari right now for you guys. I do have it pulled up here. You can go to tari.com and pull it up. They're just saying that they're making mining accessible for builders, so on. It's going to say turn your computer into a money machine. So you put your computer to work earning XTM. Obviously, that's up in the air now, I think, as far as how that's going to work due to the fact that XTM tokens now can be mined with FPGA and all that. I don't know what the efficiencies are. I'll dig into that, but I wanted to look into the coin. And then the big one obviously is going to be like, let's take a look at the tokenomics. So the big picture is that the Tari network is going to have two layers, layer 1 and layer 2. And layer 1 is secured by proof of work. Miners are rewarded with the XTM tokens. And layer 2 is a Byzantine fault-tolerant network fueled by the Tari token. So there you go. Similar to like an ETH or something. So it will have that capability of running, DeFi, NFTs, all that sort of stuff. There will be a 21 billion XTM initial supply with a tail emissions of 1% per year. 6.3 billion tokens, or 30% of the initial supply, will be pre-mined. So there was a pre-mine with significant lockups and vesting schedules. The pre-mined tokens will be used to support protocol infrastructure, offer community incentives and grants, and ensure a sufficient allocation of tokens for contributors and supporters. 100% of the tokens emitted by the protocol after the pre-mine go to miners who secured the Tari network. There's a deep relation between the XTM and XTR tokens. The only way to create XTR is to burn XTM at a 1-to-1 ratio. A transaction fee-oriented burn mechanism on the UDL network will help ensure overall token supply equilibrium. And there's much to cover. So they said, let's start with the layer 1 proof of work model. Obviously, massive pre-mine. So you want to keep that in mind, and I'd really want to see, and maybe they'll have it here. Let's scroll down. Okay. So 70% goes to miners. And then of the 30%, 4% is going to go to contributors. Well, so 4% total going to contributors, 12% to participants, 9% to infrastructure and grants, and 5% to the community. I assume a wise man once said, no token, no community. A wise man called Son of a Tech said, fuck your community. Fucking hate communities. It's always just a way to manipulate people into giving you their money, okay? You don't want to be in a community. What community means in crypto is your exit liquidity, okay? Don't become a community member. You are exit liquidity for the developers and the miners, everybody. That's what you are, okay? Frankly, that's what it is. What I was curious about is they say 5% has been set aside for incentive programs to encourage and reward people for their engagement with the Tari community. This is pretty common. I don't like these practices personally, but I will say they've become extremely common. KY Network's done it. Obviously, they've been doing it a lot. A lot of other tokens have been doing it. A majority of them have ended up being failures. So you want to keep that in mind. But a majority of cryptocurrencies have become failures. So, what is the ratio or indicator? It's hard to say. I mean, some people would say that, pre-mines and community funds and all these sorts of things drive adoption, which drive price up and keep developers, making money. So they work on the project more, which in theory provides more value. At the same time, what we do find is that when things start going south, when there are these types of tokenomics, the team will get disheartened and they're more likely to just dump it. And because it's not, fair launch, etc., it's not like the community can pick it up and run with it. It's like, well, now the devs and everybody dumped everything, the token's worthless, and there's nothing to really garner from it. So it has some upside from a theoretical argument that I've heard. At the same time, when things go south, they have the largest downside. From a mining perspective, obviously, you're going to be mining to generate revenue. If you are generating revenue off of the project and you are making sure that you are covering your power bills and your expenses, you know, good on you. And I hope that the project's successful enough for whatever portion of it you decide to hold, right? I do understand that, like, as miners, what we are is we are just, you know, at the end of the day, contractors, right? We're just going to be the people that enable the network to function, and we get paid to perform a service. I do think there is some argument for, you know, being a responsible miner and mining things that uphold the principles and ethics that you align with. At the same time, you also have to make money. So it is what it is. And these are the trade-offs that we all play with, right? I'm not a big fan of these tokenomics. I think, like, at least they're transparent and open about it. But there are the tokenomics for you guys right off the bat. The lockups are interesting, I suppose. So the initial lockups on infrastructure and grants is 180 days. That doesn't sound like a long time to me. But I guess it says 1/48th monthly. So it'll be 48 months, unlock 1/48th for 48 months after 180 days, which is 6 months. So full unlocks in 54 months, which will be what, just shy of 6 years? Be like about 5 years or something. Same with the community, except it's 1/12th. So that means you have 6 months plus 12, 18 months. So a year and a half. Contributors will be 365 days before the initial. So that's a year plus 60 months. So 5 years, right? And so 6 years total for the unlock of the contributors. And then 2-3 years for the full unlock or 100% unlock of the participants. These don't seem like terribly long lockup periods to me. You could argue over what is long and what is not, for sure. But there you go. So at mainnet launch, 756 million tokens will be available for liquidity providers. The balance will be unlocked every month for 4 years. And that will be for the infrastructure and grants. That's part of that. So I guess that's going to go into liquidity, which can help them get listings and that sort of thing. So there is all of that. And then there is a notice that it hasn't been registered under with the SEC. So keep that in mind as far as that's concerned. It says that there's 13,000 active miners currently. Let's go look at mining pool stats and see if it's up on there yet. I think it is. Community and participants. Oh, I typed that in wrong. Tari is not here yet. So do they, let's see if they have an explorer, right? Oops. Tari. .com. And let's see, Block Explorer is up. Let's see what info we get on that. Looks like block time target is 2 minutes. Relatively slow, I should assume. 2.6 gigahash on RandomX. So is the RandomX the CPU side and then the SHA-3 And that's why you can merge mine. So the CPU mining stays profitable in that case. I take that back, right? Is that correct? Yeah, that has to be correct. Okay. So CPU miners stay relevant in this particular case. And then it looks like it's about a 50-50 split between RandomX and SHA-3. That's interesting. Okay. So then it does use RandomX as well as SHA-3. So that's kind of cool. I like that. Is there something that explains that? So that's why it says just computers hard work, huh? It doesn't. I'm not getting the answer to the question I'm looking for. Okay, so it changes algos in a few days. All right, well, let's get that update then. Let me see if I can pull that up. That would mean that, is that to kick off FPGAs and such, I assume? Let's go look. Let me get an invite real quick. So that would make, let me go look, because that'll be important information. Okay. So they're just adding. Okay, I see. So they're gonna, well, GPU is not going to be relevant, right? SHA-3 will essentially is going to be FPGA and ASIC. So they keep CPU. And then the final mix will be 25% RandomX merge mined, 25% RandomX independent, meaning I guess you aren't merge mining with Monero. 25% SHA-3, which could be up to FPGAs right now. And 25% Kakaru 29, which is GPU only for now, right? So what they're doing is akin to what Digibyte did back in the day, which is helping decentralize the network further by weighting the algorithms across a variety of different hardware, which we talked about last week. So if you're interested in that, go check out that video about Digibyte. That'll explain this a little bit more in detail. initial impressions on Tari, like, I think it sounds like they're focused on allowing all hardware to mine, and that's really what they're pushing for, which is why we're seeing multiple algorithms. I assume they're going to end up, that means with some sort of all-in-one application that you can download that will then like say, oh, put it, you know, this algorithm on the CPU, this one on the GPU, so on and so forth. I'll do a how to mine video if you guys are interested on this one, in particular. Probably wait till the last algorithm comes out, just so we can not go back and have to fix it or anything like that. I can do a preliminary how-to over on Locals, though, on sonofatech.locals.com if you're a member over there. Not a fan of the tokenomics. I'm old school. I still think fair launch is the way to go. I get that there's the argument that like then the developers don't want to work on it because they're not getting paid. But unfortunately, I've seen way more instances where the pre-mine gets dumped on the audience or on the, you know, the community, and the developers disappear, more than I've seen the pre-mine be utilized to build the cryptocurrency. Outside, of course, like there was Ethereum, right? Which did have its whole like the foundation, the pre-mine, all that stuff. So I think it really depends on what they do, if it'll succeed. But I still think, like, as far as do I trust it, they get a tick against them whenever they're not fair launch. If that's fair for me to say. Obviously, a lot of developers disagree with me, but I think that's just, it's the safest way to do it. And I think, you know, if you're developing a token that's proof of work, like, where's your own farm? Why aren't you, if you believe in your project, why aren't you just mining yourself? And then benefiting from the price appreciation based off of what you've already done. That's fair launch. That is the way it should be, in my humble opinion. But, you know, that's not the way coins are getting launched anymore, especially in the proof of work space. You know, I think the last fair launch was Kaspa. And so it's been quite some time since we've had a full fair launch that was at least unique, I should say. I do think Tari appears to be unique. It is utilizing algorithms that have already been around for a while. That being said, weighted distribution of the hash power is an interesting way to play it. And so I think it provides some opportunity for a variety of hardware, and I like that. Obviously, Digibyte's done that in the past, so there's that. If you have any questions, you just let me know, and we will end it there, I think, today, because I am done skis. Let me get this trash out of the chat, and we'll just go from there. I want to thank everybody for stopping by today. Weekly Rant. Thanks for chatting. Coder Stuff. Grumpy Dwarf. Huge shout out to Odin for taking my rant. I think he was trying to get out of me anyway. Scott, thanks for being here. Snarks, thanks for being here. Good to see all y'all here. Be sure to share the stream out, and I'll see you guys next Tuesday. My voice is going anyways. I haven't been streaming and doing videos and stuff, and I guess my voice just does not hold up like it used to. But we'll see you next Tuesday.